Hey folks, Dr. Jeff Camarda. Good afternoon. It is Wednesday, April 8th, with your COVID crisis update. Another decent day on Wall Street as we approach the close. It's probably closed now, up around 1,000 points. Last time I looked, there seems to be buoyancy and optimism about healing economies and markets that I don't think is well founded. Some of the pundits are suggesting that the market, in its great wisdom, which is often wrong and irrational, but the market is kind of giving earnings a pass, expecting things not to recover until later in the year. And we're not really sure. We had a proposed vote on the portfolio board today to sell wave two. Again, remember, we've only sold a relatively small portion in wave one in the Ames accounts so we're still mostly invested and benefited from these rallies. But there's the board is still really deliberating over whether to sell into it. And we're about evenly divided, so we're not going to make a decision on this, but we'll continue to watch it very closely. And one litmus test that I'll be looking at, if we assume that the market is going to give companies a pass for horrendous earnings for Q1 and Q2 with an expectation of some normalcy and return to profitability later in the year, then I'm thinking we'll probably see some indication of that as earnings start to come out with the quarterly reports, which are going to be, we're in earnings season now pretty much, and we'll see those the next couple of weeks. So if the market really is steadfast and despite horrible reports, maybe we have approached the bottom here. We'll see. But I think I'm going to wait and see what happens there. Now, we continue to monitor the situation. It's very fluid. Obviously, we may change our position again as more data comes in, but that's where we're at now. I also promised you the kind of a description of our big plan and what we're doing to manage the portfolios through this crisis. And one of the things we're looking at very hard are so-called strategic technical indicators using charts and technical analysis and stuff that Kim and some others on the team are more adept at than I. But the intent is, if we continue to believe, which is our overall position at this point, that we're still in a bear market, we haven't yet hit the bottom, but we're not sure, that we'll continue to sell into the so-called bear market rallies like it appears we may be having now, with the expectation that when we think we're close to the bottom, you can never time it exactly or even accurately, but when we think we're close to the bottom, then we'll look to buy into the cheaper prices and kind of reset the portfolio. So for Ames, we're developing a list of asset sectors and industries that we expect to do better in the COVID, what I'm going to call the COVID economy, for lack of a better term. And these may include ETFs and actively managed mutual funds as well, to specifically target sectors of the economy that we think will do better. And we'll rebuild the Ames models using these, what I'll call favored sectors, keeping about the same risk profile or level of equity debt proportionality, essentially equal weightings for the risk profile, but using these new sectors that we think will do better. Of course, we'll continue to sell waves. We've sold wave one for Ames so far, and probably waves 2.5 for Caesar. But if we continue to sell waves, or we'll stop selling waves when we think that we're approaching a bottom, in which case we'll simply rebalance into these new models that we're building for Ames. And for Caesar, we've developed with Kim's help and a lot of others on a team, and I got to tell you that they're really working hard, doing a great job to try to get us through this. But we developed a list of dozens of stocks, I'll say 40 to 50. There may be more or less. We got to pre through them some more that we think are solid, strong companies in COVID economy favored industries that still look like they're going to be able to keep paying their dividend without having to borrow money to pay it, like Exxon is reported to be doing. So solid companies that we think will prosper in this new economy. And then, of course, we'll sell the rest of Caesar if we call waves 3 and 4. If not, if we get close to a bottom, we'll simply rebalance all of Caesar, the cash and the existing securities that we've hung on to, some of which we like quite a bit, into the new models. And some of the existing securities will be in the new models, I suspect. So that's pretty much the overall report. We have a specific game plan, and we're still working on your legacy stock positions. As we speak, we'll be working on that well into the night, and hopefully you should have your reports from your PWAs tomorrow and Friday. I promised you by Monday, and of course I want to hear about it Monday if you haven't heard from them, so you might want to go ahead and needle them sooner by email. And that pretty much is it. Thanks to Kim for improving the quality of the video production. It looks a lot better on the screen now. I'm not seeing any lags. Thank you very much, Kim. And until tomorrow, that's it. Feel free to reach out to me directly, j@camarda.com. I'm here for you, and we will get through this. Again, stay healthy. We're working very hard to pilot you through this very difficult time. It's not easy trying to time and sector time the market like this, and we're certainly not assured of success, but we are working very, very hard to preserve and regrow your capital. Thanks so much for watching. Bye-bye.